On to East Africa, Kenya's exporters of fresh produce from this month will now start paying at least 4 times more for a CESS tax. A letter from the Horticultural Crops Directorate to the industry essentially directs all exporters of horticultural produce to pay this new CESS tax from the 1st of January 2021. That CESS is based on the free onboard value of the goods being exported and not the actual volume of it, in line with these new horticulture regulations. Essentially what they're doing is that they've raised the assessed CESS levy from the previous figure of 30 cents a kilo to 0.25% of the customs value. Additionally, exporters also now have to make those payments up front instead of paying them later on as they used to in the past. The Kenya Flour Council is opposed to this particular directive. It argues that it counters all relief initiatives by the government to cushion businesses from the impact of the COVID-19 pandemic. So let's explore the impact of this change in tax policy in a bit more detail. Clement Tulezi is the CEO of the Kenya Flour Council. He joins us now live on the program. Thank you for your time this evening, sir. Before I get into the tax side of it, let's start with the broad health of the sector. Between January and October, we saw flour exports fall by at least 17% compared to the same period in 2019. How are jobs and livelihoods affected in 2020?
It has been a difficult period for us in the flour industry in 2020. As you know, from March, when there was a lockdown in Europe, which is our biggest market. Europe accounts for about 70% of our market. And therefore, when we had a lockdown in all the major destinations or countries in Europe, it definitely affected us immediately because flours were not considered an essential, and therefore we were not able to put them on the shelf in supermarkets and also with the florists. And therefore we dropped, and from March up to around the end of May, we were right on our knees. We had fallen really down, and it was difficult for us to continue surviving. But from May, we have seen that the demand started picking up with and especially as we drew into August, with the lessening of the lockdown in most of the countries in Europe, we have seen that demand has picked up, and we were just on the upward. If we look at what we are doing now, probably we may be at about 85–90% of what we expect to be doing right now, and we were expecting that the full recovery of the industry would be around June 2021. We have done everything that we can to cushion the growers and exporters and to make sure that they continue growing and exporting. We have readmitted almost all the workers that had been sent away, either on paid or unpaid leave. And as we speak, all the farms are operational. But this is being jeopardized, of course, by the taxes that we're going to talk about. But we were on an upward trend. Just looking at 2021, we were hopeful that through the Valentines, where we sell most of our produce, we should be able to start recovering and moving towards 95 or 100% by June 2021.
Indeed. So CESS taxes on the sector, this also changed smack in the middle of this economic crisis. The Gazette notice came out in the middle of 2020 in June, I believe. So walk us through exactly how this change was implemented and what it does to the cash flows of flour farms.
You need to recall that a lot of what the rebates the government had given us, including the corporate tax and also on the taxation on income, VAT, they have withdrawn starting this month. And therefore, we do not continue to enjoy some of the taxes that we were given the last 7 months. And therefore, just this comes in even to make the situation worse. We are still we are still very fragile coming from COVID. We are very fragile. And we are hoping that the government will look at an industry like ours, which deals with perishables. We export every day, and therefore any any rebate on tax would have given us an easy cushion going forward and helped us to recover quickly. But now that all the tax relief that had given us 7 months ago has been taken away, and now we have a new tax that has come in, this just comes in to compound the story of the industry. As we see this, initially we were paying 30 cents Kenya shillings per kilo, But now the new directive is that we are moving away from the kilos now to a value tax, which means that we'll be paying at least 4 times of what we were paying before. We have survived as an industry not because we make a lot of money, but because we are organized and we know that if we continue exporting every day, the little that we make the little profit that we make on a daily basis can be able to accumulate, and we become much more progressive as an industry moving forward. And that is how we have survived.
There's also
But
an
now
element
that
of
this is coming in,
there's also an element of prepayment as well to this particular cess tax, because that at face value
yes,
will just kill your cash flows, won't it?
exactly. It's very, very difficult for you to determine how much you are going to sell, especially on the auction. Over 50% of our produce is sold on the auction, and it's very difficult for us to even predetermine how much that value is. So if the government is expecting us to be paying this prior to shipment, what are we talking about? It's very, very difficult, and in fact, it's almost impossible to determine how much we are going to pay. The thing is that you'll be paying, but by the time your produce reaches the auction, the prices on the auction have fallen, and so it will just be a loss. And this is what we are saying. We need to continue paying as we have done before. We ship, and we provide the documentation about the shipping, and we pay after we have sold. And that is how business is done. Anywhere, you cannot determine how much you are going to fetch from the market before you sell. So it doesn't really make sense for the government to be telling us that you need to pay this on FOB, which means that you are paying based on what you have not sold. It's actually not possible in this case. And therefore, if we are looking at an industry that is very fragile, and now we have to pay tax 4 times what we've been paying, this just goes into, for us, it's an interpretation of how the government actually considered this industry. We have worked very, very hard to become one of the top foreign earners for the country, among the top 4. We have come a long way, from a small industry 10 years ago to one of the formidable ones at the moment, and this is just out of our organization. I would say that this industry is actually private sector driven. So we have done a lot of work on our own to be able to be where we are. But
let me just interrupt there very briefly, because it's in addition to all the other taxes you mentioned. So the cess tax has gone up essentially by a factor of 4. The tax reliefs on income tax, on value-added tax, that's gone. In addition to that, there's now a minimum turnover tax, 1.5. I believe that's charged at 1%. There's a digital service tax at 1.5%. Do those directly affect your members as well?
All those taxes affect us, especially when you look at our business at the auction. All of those taxes affect us directly and on a daily basis. We are not an industry that will wait for those taxes to affect us 1 month down the line. As it comes into effect, it affects us on a daily basis. So from 1st of January, we are paying all those taxes. And you can imagine, a study that we did a few years ago, about 5 years ago, was showing that this industry pays up to 42 taxes in a year. So which industry can survive with 42 taxes in a year? That is absurd. And we expect that the government should be able to come in and give us relief. If they're looking at really growing this industry to become one of the major industries, as we have seen, then the government should be able to facilitate trade and business, but we are not seeing that from government.
All right, we'll leave it there for the time being. Clement Tulezi, CEO of the Kenya Flour Council, thank you very much for your insights on the program tonight.